By CoinDCX, your gateway to crypto.
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Markets snap their two-day winning streak. Sensex falls from its record high, closing down 230 points. Nifty down 66 points. PayTM share tumbles more than 10% on anchor exits. Finance Ministry all set to trim its divestment target for next year. Official sources tell Business Today TV that market conditions are not conducive for PSU sell-off. The British economy is in recession, says the UK government. Economy expected to contract by 1.4% in 2023. Growth expected in 24. Aditya Birla Group steps into the Haute Couture space to open luxury fashion stores in partnership with Galeries Lafayette. Mega stores to open in Mumbai and Delhi. Global investment majors and top celebrities burn their fingers in the FTX in the crypto exchange. British supercar brand McLaren finally drives into India. First showroom opens in Mumbai. BTTV brings you up close with the iconic 765 LT Spider. Indices today snapped their two-day record-breaking spree with investors booking profits amid economic uncertainty. Most global equities were subdued today as investors chose to stay light amid lack of major triggers. The Sensex closed at 61,750, down 230 points from the previous close, while the Nifty 50 ended 66 points lower at 18,344. The biggest gainers on the Nifty were Tata Consumer, Adani Enterprises, L&T, Power Grid and HDFC Life Insurance. The losers included Titan, Mahindra & Mahindra, Tata Motors, Eicher Motors and Apollo Hospitals. PayTM plunged by more than 9% in trade today after news that Japan's Softbank, one of its anchor investors, was selling 4.5% stake in the company. Softbank, which owns 17.45% in PayTM, has reportedly sold 29 million shares, a part of its stake in the price band of 555 to 601 rupees. This puts the deal value at around $200 million. Earlier, another of PayTM's anchor investors, Societe Generale, had sold 363,000 shares on Tuesday at a price of around 639 a share. The lock-in period for PayTM investors expired this Tuesday and the share has fallen 16% since then. FSN E-commerce, the parent company of Nykaa, is another stock which had its anchor lock-in end earlier this month. Its share dropped more than 7% today before recovering. My colleague Sakshi Batra talked to Centrum Broking's Nilesh Jain about the outlook of FSN E-commerce and 197 Communications.
First, we need to understand the valuation they have got at the time of listing was very high. Reason being, markets were trading at all-time high levels a year back. And looking at the higher valuation, what they got at listing price, this kind of correction was very much due and very much expected. Now, certainly, this loss has widened. If you look at in terms of the PayTM number, and that is certainly adding fuel in the fire. If you look at the technical structure as well, we have seen a crack almost from the 1900 level to the levels of near about 500 in the month of March, in the month of May respectively, and twice it has formed a bottom. And also we have seen a smart recovery as well, due to which it reached the levels of 850 odd levels. And after reaching those levels, we have seen a gradual decline. And this kind of decline is very clearly shows that there is no visibility in the profit making for the company. Even management has itself said that it is unfair to expect profit from the company like this. So looking at the overall structure, even technically, I believe there will be further downtrend which is likely to continue. Today there was a gap down opening. It looks like a breakaway gap. And this further downtrend may extend further towards 500 mark. That is another 10% downfall is very much due on very much on the card. So first of all, my strategy to those who are already holding the long position should keep a strict stop loss below 500. And if at all we see any pullback towards 600 to 650, that's a good exit level and exit on rallies. And for new investors, it is better to avoid for the time being. There is no visibility, as I mentioned. And the Softbank, in fact, they are also exiting at loss. So they were very much waiting for the lock-in to get over. And it looks like a very much desperate exit from from the investors. So that's certainly not a good sign. And see, new investor would only come if they see free cash flows in the very near term. That is certainly not visible. So due to which I believe new investors should definitely refrain from creating any sort of long position at current level.
Yeah.
We may see further downtrend to continue, specifically in the PayTM counter.
Okay. The question is how much more will these pre-IPO investors really look to offload from here? And also investors are worried about one more thing, and that is that every time these pre-IPO investors look to offload more shares, do these stocks stand the risk of even falling more from here? What would your thoughts be?
Well, as I mentioned, the first answer to your question is that we are not sure whether how much they will offload their further positions.
Yeah.
But looking at the exit they are making in a desperate way, and that certainly shows that going forward we are likely to see further offloading of the positions. And if at all, that's why I said if we see any pullback, utilize that pullback to exit the
Right.
position. There are better opportunities in the market. The market is very broad, and you will get better stocks where the companies are basically profit making. So these are basically loss making company where loss is constantly widening. So that is certainly not a good sign, and I hope the investor may not be happy with that. So going
Yes.
forward, I believe that we are likely to see further drop in the prices. If at all it reaches 500 mark, then I won't be surprised the stock touches the 450 and 400 levels going forward.
Okay.
So better to use the pullback as an exit opportunity.
Okay, that's an important point that you made. You were also talking about the earnings visibility, and that's an important point that all the investors must consider as well. Let me just bring up some of the facts that we've already seen in the Q2 earnings. Now, PayTM's loss, in fact, widened in Q2, while the management is still confident about breaking even in EBITDA terms in Q2 of FY24. Talk about Nykaa, that reported a multi-fold year-on-year growth in Q2. PayTM now continues to improve its revenue and margin profile, but on the other hand, when you talk about the profitability, that still stays for Nykaa going forward. But I want to understand from you, have you understood any kind of positive signs that have come about in both these earnings?
Comparatively, I believe Nykaa is slightly better placed. Reason being that company is still making profits. So it is important for a company to continuously generate the profits. And even if you look at the only caveat as far as Nykaa is concerned that I have is the margin that is likely to drop. Even if you visit their website, we are constantly witnessing a huge amount of discount that they are offering. So certainly their margin is going to hit. And the business is not that sustainable looking at the competitive environment that they have. And also the company has the zero dividend yield, and company is not paying any sort of dividend. So that is again not a good sign for the organization. And as far as levels are concerned, I'll tell you technically first, we have seen a gradual decline similar to PayTM in Nykaa as well. It got listed and it moved near about 420 levels post listing. And since then, we have seen a constant decline. Any pullback that we saw in between that got sold into. And now, after bonus announcement, I'm talking about the adjusted price. It has recently made a low, I would say a multi-week low that is near about 165 to 170 odd levels. So that will act as a crucial support and immediate support. So at current level, those who want to play contrarian and take a contrarian bet, one should keep a stop loss below 160. It's purely from a trading perspective, trading bet. I'm not expecting any V-shaped recovery in this particular counter. But for the time being, we can expect a pullback towards 200 to 205. Again, I would say that is the good entry, good exit level. Those are already holding the long position should think about exiting near about 200 to 220, or maybe at least review the position once it witness a good pullback.
The government is expected to slash its disinvestment target next financial year. With the current market conditions not exactly favouring the sale of government enterprises, the Finance Ministry is likely to set the target at around 30 to 35,000 crore rupees. The target was 65,000 crore this year and is unlikely to be met despite the big-ticket LIC share sale. For more on this, we're joined by BTTV special correspondent Karishma Sudani.
Well, Abha, right. In fact, it's one of the most important aspects that is going to be a part of the finance bill, and that is disinvestment. At least for the past 3 years, and the action has been quite, I'd say, elevated when it comes to selling of assets to tribal players by the BJP government. Now, what we're picking up from our sources is that government may actually peg a really low target of close to 35,000 crore, which is almost half of even what the current target is. A year back, they had they had focused on a really elevated target of close to 1,75,000 crore, which of course they were not able to fulfill, also because of various reasons like the pandemic. And this year, 65,000 crore, it's unlikely that they'll be able to complete and achieve that until March. BPCL being off the table and LIC not fetching them as much as they expected has been not worked in their favor. So a low target next year, and with IDBI Shipping Corporation and Concor, it looks like the government wants to keep target low, but will probably is wanting to exceed expectations, since everybody has started measuring the whole Disinvestment Act exercise by the target.
Thanks for that, Karishma. The global pessimism is likely to hit the Indian economy as well. In an exclusive conversation with Business Today TV, Pranjal Bhandari, MD and Chief India Strategist at HSBC, has warned that a dip in exports could hit India's GDP growth.
Can you first tell me what is the shape of the growth curve looking like? Is it an L-shaped recovery? Is it a K-shaped recovery? What is your views on this?
Well, look, I think growth has been strong in the last couple of months, but I also think that it's going to slow a little bit in the next couple of quarters. And the big reason for that is global slowdown. I think globally we are headed for a slowdown, slowing growth. And that means India's exports weaken a bit. India's exports have been a huge driver of post-pandemic recovery. And if that slows, then India's GDP will also slow. So I think that's coming and we need to be prepared for that.
We also know that there's a increasing gap between the haves and the have-nots, in the sense that the purchasing power of a lot of tier 2, tier 3 cities has been stripped off. So what can the country as a whole do to sort of see at recovery in a big way at the macro level?
Yes, you're right. I think K-shaped recovery is probably the right alphabet we've seen coming out of the pandemic. Large firms, employees of large formal firms, high-tech firms, skilled workers have all benefited through the pandemic. But on the other hand, small firms, informal sector firms, low-skilled workers, low-tech workers have actually seen their salaries fall, or even sort of, their jobs go away. So I think this is a problem we are moving with. We are not really acknowledging it fully because our GDP data does not capture it. But over time, I think we will have to pay a price for it. What do you do? There is no quick fix. This is a function of important reforms. And I think the big problem we have in our country is that many small firms remain very small for very long. We need an ecosystem in which small firms grow over time, become large, and the people who work in these small firms start earning more over time. I think that is the right ecosystem we need. What do you need to get that done? We need all kinds of reforms. Ease of doing business, version 2, better access to finance, better access to skilled laborers, better skilling institutions. I think we need a lot of reforms. We have made some progress, but we have to make a lot more progress over the next decade.
Is there a pattern that you're noticing in terms of consumer behavior change over time when it comes to spending power, behavior change? What are some of the consumer metrics that you've sort of noticed, seen change over time?
Well, the consumption basket changed a lot during the pandemic, right? As when we were sitting at home in the lockdowns, there are very different kinds of goods and services that we were demanding. So that was a one-off, and I don't think that's going to become the new normal. I think the new normal is going to be what was pre-pandemic eventually, which is that at the end of the day, consumption is a function of wages. When your outlook on wage growth is strong, when you think you have a good job, your wages are going to rise over time, then you go out and you spend well, right? So in an economy which is reforming, which is growing, in which there are new prospects, which is investing, jobs rise, wages rise, and consumers consume, consumers go and spend. As long as we don't get into that positive path, I think our consumption will remain a little feeble, as has been the case in the last couple of months.
Right. Lastly, I wanted to understand, with the consumer index going down and it's hasn't reached the pre-pandemic levels and inflation incoming, give me one sign of hope, give me one sign of positivity that people should sort of look out for and hope for in the future.
Look, I'm very happy you asked that because actually I have a lot of hope. Look, right now there is a lot of global uncertainty. The hope is that at some point it settles. And once that settles, I think there are a lot of good things that are happening in India which can really take the country up. I'll tell you two new sectors which emerged, while we were in the pandemic. One is high skill exports. India is now gaining global market share in the exports of mobile handsets, drugs and pharmaceuticals, specialized machinery, also high skill services, IT services. That's doing very well. The second is the entire startups ecosystem. Our young entrepreneurs are getting access to a lot of global funding. They are providing digital solutions to a lot of real economy problems. And I think we've only touched the tip of that iceberg. I think there's a lot to be done. I think once the current global uncertainty goes away, it will take a couple of quarters. I think there's a lot of good things that can happen in India. And I think with the right reforms, India can easily become a 8% growth economy. So, there is a lot of bad things in the short run, but I think there's a lot of hope for the medium term as well.
All right, let's take a very quick break. When we come back, we bring you the 12 crore rupee supercar about to hit Indian roads.
Have you looked at the back of the water bottle and found that it has an expiry date? The shelf life of water has been debated for long. So let's find out how long stored water remains safe for consumption and what happens if you consume expired water. Treated tap water is safe to consume for up to 6 months if stored well, while sparkling water is safe for up to 1 to 2 years. Tap water might start tasting odd if it gets mixed with the carbon dioxide in the air. However, both tap water and carbonated water are considered safe for drinking for 6 months despite the odd taste. Water in its pure form doesn't expire, but the plastic bottle has an expiry date. Drinking from an expired bottle isn't a good idea. Plastic can start leaching into the water over time and contaminate it with harmful chemicals such as antimony and bisphenol. To preserve water for long, it's important to store it well. The first step is to identify the amount of water to be stored and find a cool and dry place. Copper and steel vessels are ideal for long-term storage. For regular use, one can always opt for BPA-free plastic containers or glass bottles. To avoid contamination, one should refrain from using pipes and fill it directly from the faucet after filtration. If faucet is stored in gallons or drums, there should be a lid on it at all times to avoid contact with air. Exposure to BPA, which is used in plastics, has been known to interfere with reproductive development in animals. It has also been linked with other cardiovascular diseases, immunity diseases, and diabetes in humans. Filtration of water is must. The easiest way is to bring it to boil for around 15 minutes and let it cool. Most modern households use water purifiers nowadays. However, regular servicing of reverse osmosis, purifiers, and changing candles is crucial. Liquid bleaching is rare these days but has been a popular purification method in the past.
Welcome back. More than $32 billion of investor wealth, even if notional, has been wiped out by the FTX implosion. The crypto exchange, the second largest in the world, evaporated into thin air last week after its crypto token plunged nearly 90%. Surprisingly, among its 5 million investors are some of the biggest names in the banking and VC business. Names you would expect knew more than the normal investor.
It took just a week for the world's second largest cryptocurrency exchange to land up in bankruptcy court. A company worth $32 billion in January turned worthless last week. Its founder, Sam Bankman-Fried, worth $23 billion just weeks ago, today has a net worth of $1. The contagion and the fear wiped out $150 billion from the crypto market in just 1 week. The exchange had its branding on Miami's NBA stadium, sponsored a Formula One and Major League Baseball team. All this made possibly by over 100,000 creditors who lent it money. And if reports are to be believed, over 5 million investors. But it's the big boys of investment banking who are under scrutiny for the huge investments in the crypto exchange. Singapore's Temasek has written off $275 million. Sequoia Capital has lost the $215 million investment it made in FTX. So has Paradigm. Even Japan's Softbank finds its $100 million investment lost. Canada's Ontario Teachers Pension Fund has also lost $80 million. The most unfortunate are probably the employees, whose ESOPs worth $950 million have evaporated. Other investment majors who have lost money include BlackRock and Tiger Global Management. Celebrities like iconic footballer Tom Brady, his estranged wife Gisele Bündchen, basketball players Shaquille O'Neal and Stephen Curry, and tennis star Naomi Osaka also reportedly had their fortunes tied up with FTX. Even though FTX claims in its bankruptcy filing that it has assets of $10 to $50 billion and liabilities of an equal value, there are few who believe the exchange will be in a position to return its creditors or investors' money. There is also the question of the $662 million which have disappeared from the exchange accounts, which no one can account for. Bureau Report, Business Today TV.
What's the impact of the FTX implosion on investors in India? And could Indian crypto exchanges go the same path? Business Today TV correspondent Akanksha Chaturvedi spoke to Smith Thakur of Delta Blockchain Fund to find out.
Since you were associated with FTX, would you have a ballpark number as to how many people were invested from India at the exchange and what was the amount they had put in?
I was associated with FTX very long ago in the start of 2021, so I don't have exact figures of how many Indians were invested in FTX, but as FTX has filed for bankruptcy in the US, they will have to declare all the users, their balances, and how much money they held with FTX. So we might soon have the figures in the coming months, but right now there are no such figures of how many Indians were invested and how much funds they held in FTX.
All right, Smith, all right. So I have another question on the same lines. Like you said, there was a liquidity crunch at FTX. Everybody was, withdrawing their money at the same time. If something of the same lines were to happen in India, a majority chunk of Indian crypto investors start withdrawing money from Indian exchanges. Do you think something like this could happen here as well? Will Indian exchanges have the liquidity to support all the withdrawals?
Yeah, so generally, every exchange should have the liquidity because the user funds, exchanges cannot use the user funds for their own personal needs, for their own personal trading. So if I have my crypto at an exchange, at an XYZ exchange, they cannot use my crypto to trade or do anything personal. So this shouldn't happen with any exchange, let alone Indian, but in any exchange. I think Indian exchanges are much on the safer side, as they have been trying to be regulatory compliant, and I'm sure they aren't doing anything of such. They aren't doing anything such which could lead to bank run scenarios.
McLaren, the British supercar company, has officially forayed into the Indian market. The company has opened its first showroom in Mumbai. Though the first car available in India early next year will be the Artura, my colleague Rachna Dhanrajani, who was at the launch today, found herself face-to-face with the iconic 765 LT Spider.
Think supercars, think McLaren. And now these supercars will be seen racing through the streets of Mumbai, and all credit goes to these two gentlemen here who are with me. So I have with me Paul Harris, who's heading APAC for McLaren, and the man responsible for getting McLaren to India, just like he has with other brands, Lalit Chaudhary himself. So we're going to start by asking, what took so long?
Okay, we were waiting for the right moment. I think it's a culmination of the brand evolving with its product portfolio, having focused on other markets in the past, the Indian market becoming a lot more mature in a way where it can receive a brand of this sort. And in a post-COVID environment, consumption has come back, doubled up from before, and consumers are lapping up cars in this segment. We still have a lot of catching up to do with the rest of the world, but the early trends are very encouraging, and the trajectory is good.
Could you two tell us about this car that you said it's going to be the first one in India? It's already booked for, it's already set for. What makes this one special?
Okay, well, thank you. That's an opportunity for me. So this is a very, very limited production run. It's a 765 LT Spider. You can't see it because the roof is on the car at the moment. So we have these gull wing doors which open up very, very, dramatically in this particular way. And then the customer entry point, if you just follow me around here, is into here in these uniquely sculptured and individualised bucket seats that are made of this phenomenal lightweight carbon fibre. So it's all about weight saving and performance. So 765 indicates it's 765 PS of power, delivered in a very, very lightweight chassis, and probably is the absolute pinnacle of everything that McLaren does under one area. And it has this legendary thing, it's called an LT because it means long tail. And what long tail means is that we've gained a slightly longer proposition, but at the same time we've taken out weight, increased power, and increased the driving dynamic of the vehicle. And in this particular execution, we have a very unique paintwork, which is a one-off for a particular customer, and a number of unique features like this high carbon fibre content within these inserts here, and this high carbon fibre content here in the rear fender as well. So overall, it's an absolutely phenomenal car. And if we just follow me around to the back and you have a look, we have these four unique feature or key visual feature of this car that not only adds to the performance but also adds to the overall sound quality of the car in terms of these unique blended four exhausts that come out of the back. So a very rare, very stunning, fabulous car to drive on road and particularly on track. Definitely for me, a combination of everything that McLaren's famous for.
And that's where we leave it on the show tonight. Thanks so much for watching.
Watching India Today.
Hello, you're watching India Today. I'm Aishwarya Paliwal. We start the show with the headlines. Centre moves Supreme Court against the release of Rajiv Gandhi. Convict seeks a review of remission. Says top court's order in the case is legally